Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, and in this video I will share more scenarios with you than usual, but the confluence between the different scenarios will become clear in the probability section at the end of this video. Starting with the first triangle, where we are looking for a 5-wave horizontal ABCDE movement before continuation to the upside. The invalidation for this scenario is price moving below wave A or above wave B, because we first want to finish C, D or E. Now this wave C might already be finished at the lows over here after a simple zigzag ABC to the downside, but we do have to at least consider the possibility of a complex wave C, which then leads to a double or potentially even a triple zigzag, but in this case then a double zigzag in a WXY, ending below the low over here, where the target box is between 61.8 and 62.9k for some additional support. Depending on the price action that we see over here on the lower time frames, we can consider this wave C to be in fully and look for this wave D. If we go to the second triangle, then we have a finished triangle. Wave A over here, however, is very short in time compared to the wave B, C, D and E, which for me lowers the probabilities, as usually in a triangle, wave A over here is at least one of the longer waves compared to the waves that come after. Now this is a running triangle where wave B ends above the origin of wave A, but should end below the 1.618 Fibonacci taken from the high to the low of A, which is the case. It's just that this wave A is very short in time compared to all the other waves. Now after this wave E, we then expect continuation to the upside. Now we do know that the weekend is approaching, and the moment the weekend hits, it's very unlikely we're going to see impulsive structures. It's also Friday already, and this move to the upside looks very much like a three-wave structure, not an impulsive structure. On the lower time frames for an impulse, we wanted to see a 1, 2, 3, 4 and a wave 5, with this wave 4 over here not hitting the 0.618, which I will talk about later in this video, but it did hit the 0.618, invalidating an impulse here towards the upside, increasing probabilities. This is a three-wave move to the upside, and therefore in this scenario, if wave E is finished and we are looking for bullish continuation, we can only think about either a double 1-2 over here for a very big 3, but we know the weekend is coming up, or we are thinking about a diagonal where all of the waves are zigzag structures, where this is a finished wave 1, we then have a 2, 3, 4 and eventually a wave 5, but it's very early to call. This triangle in general for me has lower probabilities compared to the first triangle I've shown. The third scenario I want to show with you is a WXY. Here we are talking about a sideways double combo WXY, where wave W is a zigzag and therefore wave Y is not allowed to be a zigzag. Wave Y has to be a flat structure or a triangle structure, and in this case I have a triangle on my chart over here instead of a flat. As for a flat, we would expect an ABC structure over here, but that looks quite unlikely at the moment. Now what I don't really like about this particular scenario is that a wave A of the triangle did not hit the 0.618 trend-based fib extension taken from the high to the low of W to the high of wave X, which usually is a minimum target for a wave Y. In this triangle, if this is the low of your wave A, we do also not expect the 0.618 to be hit, which lowers the probabilities for this particular scenario. Now in general, we do expect simple sideways movement before then continuation to the upside in this particular scenario. And then the bearish scenario, where we do take the low of 60k over here, is a potential diagonal. And I thought of this scenario after seeing Stuba in Discord talking about diagonals, and here we are then talking about a wave 1, a 2, and then we look for a 3, 4 and a wave 5, where this diagonal is a 3, 3, 3, 3, 3 diagonal, where all of the waves are zigzag structures in wave 1, wave 2, wave 3, wave 4, wave 5, zigzag family structures. It can be a simple zigzag in an ABC, but also a more complex zigzag structure in a WXY, a double zigzag. The target for this wave 3 and a contracting diagonal is going below the low of this wave 1, meaning below 60.7k. That is a key level indeed. The target for wave 3 in a diagonal is between the 786 and the 886 trend-based fib extension taken from the high to the low of 1 to the high of wave 2, which as you can see is right around this low. However, The invalidation for a wave 3 in a diagonal is the 1-to-1 over here. As for a contracting diagonal, wave 3 should usually not really be longer than wave 1. Now, with regards to the new rules in Elliott waves, the new rules state that wave 3 can be longer than wave 1, but it remains very, very rare. So when the 1-to-1 is hit, it's not necessarily a hard invalidation, but it does significantly reduce the probabilities for this particular diagonal. The 1-to-1 is sitting at 58.7k, and after wave 3 we want to see a zigzag up in 4, finally another 5, and then eventually we are going to be looking for a little bit of a bounce towards the upside. Now, if we then talk about that 0.618 over here, this 0.618, which has now been hit, has a big impact on the flat scenario that I have shown in previous videos and previous live streams. The flat scenario was a wave A to the downside over here, looking for a double zigzag in a wave B, and then a 5-wave impulsive structure to the downside in a wave C. Inside this wave B, we were then looking for a W, X, and eventually a wave Y, a double zigzag to the upside. W, X, Y. And inside wave Y, we are then looking for an A, B, and a wave C. Inside wave A, we are looking for a 5-wave impulsive structure. So if we then zoom in to the lower time frames, what we were looking for was a 5-wave impulse. 1, 2, 3, 4, and eventually a wave 5. However, in an impulsive structure, wave 4 is not allowed to have overlap with wave 1, and also wave 4 should not hit the 0.618. That is an invalidation for a wave 4, and clearly we now hit the 0.618, invalidating an impulse to the upside over here, or at least significantly reducing the probabilities for an impulse here towards the upside, which in turn reduces the probabilities for a wave A, B, C, and therefore it reduces the probabilities of a bigger flat. So actually this 0.618 over here, taken from the low of 2 to the high of 3, if we talk about an impulsive structure, has a big impact with regards to the scenarios that we had previously. On the 1 hour time frame, we also had this gap over here. I only spoke about this shortly in one of the live streams, where the gap started at this candle and ended at the small order block over here. We eventually had a bit of resistance once we tested the low of this gap for the first time, but then we closed a candle inside the gap, increasing the probabilities to fill the gap to the upside, which we did over here, hitting the order block, hitting the high of the gap, acting as resistance, which is very nice indeed. If we look at the CVD divergences, then the CVD divergences we had over here that were bullish played out yesterday as price took this high. More locally, however, we did have a bit of bullish CVD divergence here, which did play out, and then we had bearish CVD divergences, lower high on price, higher high on the CVD, which you can see over here, lower high on price, higher high on yellow, as well as on blue, a higher high, bearish CVD divergence, target is this low over here, which has also played out very nicely indeed. Now, if I zoom out, you can see we do have some bigger bullish CVD divergences, with targets being this high as well as this high, but the more local CVD divergences for me are more important than the 4-hour bullish CVD divergences. So I prefer to keep an eye on the 15 or the 5-minute over here and see what's up. But now, because the bearish CVD already played out, we have to wait for new CVDs to form. We also have some news today at 1:30 p.m. Central European Time. We have some high impact news, as you can see over here, so make sure you trade safe around this hour. And if we then look at the probabilities of the different scenarios, then on the 4-hour time frame in this range over here, probabilities start to increase for triangle scenarios, and on the second spot we have the bearish diagonal. And this is what I mean with confluence between the different scenarios at the beginning of the video. So let me go through it. If we look at the WXY, we don't expect price to move below 64k, as we want to see a horizontal triangle here before continuation to the upside. In the first bigger triangle, we don't expect price to move below 60k, that is an invalidation, and arguably we don't expect price to move below 64k if C is finished over here. And in triangle number 2, wave E over here finished, we don't want to see price moving below wave E, as we want to see price moving towards the upside. So in these scenarios, you can see that up pretty much means staying above the 60k low over here, but arguably it means staying above 64k and price moving towards the upside. The only scenario that leads to price moving below 60k at the moment before taking maybe at a later stage these highs is the diagonal, where we want to see price moving below this wave 1. So therefore, from a probabilities perspective, probabilities are higher to move up and take the triple top before taking the low over here, maybe at a later stage. And that is what is important when we look at the confluence of these different scenarios. That being said, I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.